Hello, good morning, ladies and gentlemen. Welcome to yet another promising session as we take a technical dissection into the current market structure in anticipation of both the UK and the New York session today. Well, first of all, I would like to apologize. I'm so sorry I came in late. I had some technical issues trying to broadcast my screen. I'm still finding my way around getting used to the YouTube live technicalities, but thank goodness that I'm back on and things are good to go right now. First of all, I would like to quickly confirm that you can hear me clearly and see my screen by typing hi in the comment section. So if you can hear me, I would appreciate that you give me some feedback in that regard by typing hi in the comment section. Thank you very much as you do so, and as we get ready to kickstart the live session. So please, I would like to see some feedback, please. If you can see my screen and you can hear my voice, typing hi in the comment section, please. Okay, Kwaku Amin. All right, thank you very much. So I will just take that as a positive feedback that we are good to go this morning. So I'm so excited to welcome you guys to yet another promising session as we've had a quick start to the week, as we had some profits during the course of yesterday's trading session, as it was beyond expectation. Actually, I was thinking that the market will start very slow, but we are glad that we had positioned ourselves in anticipation of this move. So with that being said, here we shall be diving right into the business, and the first thing we normally do here is to look at the economic calendar so that we can keep tabs on the fundamental perspective of the market, so that we can position ourselves in anticipation of any potential opportunity. As you all know, the fundamental gives or brings the liquidity into the market to drive price movement. So whatever technicalities we are able to identify here, if there are no liquidity or no price movement, definitely it's all null and void. So one thing we are going to be doing right now is to look at the economic calendar, and based on the events that the pairs that we are monitoring, we are going to be looking at events affecting the pound, the US dollar, the Japanese yen, and which other one? I think that's the three events we want to be looking at. And if we look at the economic calendar right now, remember we are anticipating the Bank of England's governor's speech coming up. This is coming up in 30 minutes from now, and obviously everyone in the market will be looking forward to this event. And how are we going to be positioning ourselves ahead of this? We shall be looking at this in detail by reading the current market structure. Then for today as well, we have something for the euro, which is not part of what we are monitoring, and we really don't have any other high impact event except a medium event in terms of the housing price index and the consumer confidence, which will be affecting the US docket. So besides that, there's nothing we want to be looking at here, so we shall be diving right into the chart to using our technical skills to identify potential trading opportunity for today. So as usual, the first commodity we are going to be looking at this morning is the US oil. And on the US oil, we have been quite profitable beyond expectation on this pair, and thank goodness we were able to position ourselves ahead of this move. And if you look at the structure here, let's quickly run through what our expectations was like yesterday and how we actually anticipated this trading opportunity. So we saw a situation here at the beginning of the live session yesterday when we saw how price action was trapped within a range between the $69.80 level and the $69.10 area. And you all know what we look out for whenever we have this kind of channel. It's very simple. We want to see price action do a breakout, possibly a retest of that structure or a breakdown of that structure to give us a trading opportunity. And what we saw here during the live session yesterday was price action doing a breakout retest of that resistant line had the $69.80 level. Let me extend this out a little bit so that we can see things more clearly here. So that is that here. So we had the resistance line around the $69.80 level, and in fact price action broke out of that structure, did a retest of that level, and even during the live session yesterday was when we had our position triggered at this particular point in time. And to further help us guide our trading activity for yesterday's trading session, what we did here was to identify a bullish trend line which will be supporting this bullish momentum if price action continues to the upside. And if price action breaks down the bullish trend line, we will be anticipating a bearish opportunity. So we have the bullish trend line figured out here after connecting the series of higher lows, as you can see what we have here. And this was the basis, this was the platform we wanted to be using to guide our trading activity. And you can see what happened here. Throughout the course of the last 24 hours, price action has remained above that bullish trend line. And I also shared this on my public platform, I think 4 to 5 hours after the first trigger of our position here, where we also anticipated another opportunity to add more position to our existing trade, had the breakout of the $70.20 level. And in fact, price action broke out, retested that level to trigger the second position for the week. Then we also added another position here after price action broke out of the $71 level. So we had 3 good positions as we rode the move all the way to the upside. And at the end of the day, we were able to, the first position gave us over 320 pips. The second position gave us about let me see how many pips was that. So we had about 280 pips on the second position, and the third position gave us about 200 pips in profit on that one. I would like to share the commentaries on that USOil before we go into the details for today, so that we can all be on the same page here. So this is my USOil publication on my TradingView platform. And this is how we started the week here. We saw how price action broke out the structure. This was immediately after our live session yesterday. I did this update here, and we continue to ride the move. I updated us here that we are going to be looking forward to another opportunity at the breakout of the $70.20 level. And then we joined. You see we had a second position triggered, and I also highlighted this area here that we are going to be looking forward to another opportunity. And you can see we had price action move significantly well in our favor. So approximately we were able to make about 800 pips with 3 positions running on that one. So congrats to everyone who has been part of this profitable journey on the USOil. So with this being said here, what is going to be our next line of action? What are we going to be doing today? What are our plans following this profitable trade on the USOil? Well, some people might decide not to take any trade anymore as they will be done for the week. But well, one thing we want to see here is the week is still very, very early and still has a lot of potentials for more trading opportunities. So what we saw here during the early hours of today was quite interesting, as I shared this update here this morning, as we saw price action trapped within a range. As soon as price tested at $73 level, which happened to be the TP target, we started seeing price action going through a consolidation phase here, ranging between the $73 level and the $72.50 area to further emphasize the level of indecision in this particular market. And you all know what we look out for whenever we have this kind of simple setup. Definitely we want to be seeing either a breakout or breakdown of the channel for trading opportunities. And this was exactly what I shared here this morning. We had the channel mapped out here, and obviously we should be having our buy stop and sell stop order placed at both ends of this channel. And let's go back into the live chart here. As you can see what has happened in the last couple of hours. Right now we already have a buy position triggered. As you can see, price action has broken out of that $73 level to trigger a buy position at this particular point in time. Well, at this point, we just want to continue to monitor price action, and our stop loss definitely will be somewhere right around the support line of that flat channel that we have here. And based on this current structure here, it is quite obvious that we have a trend continuation pattern here, which could be in the form of a flag pattern, or for me, I will call this a bullish rectangular pattern. And with the kind of situation here, there is still a tendency that price action could come back and do a retest of that structure in anticipation of the second wave above that channel. So for those who has missed out on this opportunity, well, I'm of the opinion that price could still likely come back into this level to give us another chance to be part of this trade. And with the situation we have here, where will our take profit target be on this current buy position that we have? In order to do this, we want to be scaling up into a much more higher time frame rather, so that we can look at what the structure is saying from an holistic point of view. Now, in order to do this, we'll scale up into the 4 hours time frame, and what we have on the 4 hours time frame here really is not very informative in that regard. So we want to be scaling higher than that into the daily time frame here, and I think that will be able to give us a better perspective into the current structure. And remember what I told us all at the beginning of the week, and if you had watched my video which I published during the course of the weekend on the USOil, you will really understand what our expectations are around this current structure. I laid much emphasis on the importance of what has been happening in this market since the beginning of this month, and we saw that bearish impulsive move that started here during the first week of this month. We saw the move broke to the downside, and in fact it broke down 2 key structures here. The first one is the bullish trend line here, which was actually supporting a bullish momentum for over 4 to 5 months, and we saw the first breakdown of that structure. I think 3 weeks ago we saw the first breakdown of that structure, and a couple of weeks ago we saw another breakdown of that $70 level. And one thing we said here yesterday is that we want to be seeing our price action will be reacting to the $70 area in anticipation of what our next line of action will be, as if selling pressure resumes around that area, we might be looking out for selling opportunities, and if a breakout of that level happens, we want to be joining the bullish momentum, and this is exactly what happened here in the last 24 hours. And look at the bullish trend line here. So the bullish trend line here falls somewhere right around the $75 level at this particular point in time. And if you look at the breakdown of that trend line here, you all know from a technical standpoint that whenever we have a breakdown of a key structure like this, we expect that one point in time price is likely going to come back, do a retest of that structure in anticipation of a move in the direction of the prior leading price action. But the situation here, this is what we're expecting from a technical standpoint. This is a theoretical understanding, but anything could actually happen. We could have a situation where price will break out of that structure, retest it to incite another wave of bullish momentum. So for me at this particular point in time, you could have your TP target sitting somewhere around the $75 level, which shares a beautiful confluence with our trend line. And we want to see our price action will be reacting to that trend line to decide if you want to be adding more position to our buy position, or we want to be anticipating a sell momentum to the downside, probably in anticipation of the second leg of the bearish momentum that started at the beginning of this month. So this is what we shall be looking at. So we have the $75 area mapped out as an area we want to be having our TP target zone, at least in the meantime, and depending on how price action reacts to that level will determine if we are going to be selling or buying. So let's scale back down into the 1 hour time frame, as we already have deciphered what we needed on the higher time frame here. So we go back into the 1 hour time frame, and then we map out our $75 level, which will be our yardstick for TP target for today. So let's bring this in. Let's zoom into the current market structure here, and we should be having the $75 level somewhere around here. which will be dovetailing to about 200 pips on this one, which is not bad anyways. And I hope that price action will give us multiple entries, the potentials of multiple entries as we continue to monitor price action. So let's see how this is going to play out in the next couple of hours. If market gives us more opportunity to add more position, I will be sharing this in detail on my trading view platform. So that is my view here on the US oil. We'll continue to look out for bullish momentum here, and if anything otherwise happens, I will be giving you an update in that regard in the comment section. So congrats to everyone who has been part of this move. If you do have any questions regarding what I just explained so far, feel free to drop your inquiries in the comment section, and of course I'm willing to be of help in that regard. So for those who had missed out on this opportunity here, I've told you we want to remain patient, see if price will at one point in time come back to retest structure in anticipation of that move to the upside, or we might likely have a situation at one point in time where price will do some retracement, consolidation phase, probably breakout retest to add more position to our existing trade. So let's see what happens afterwards. I will be giving you an update in the comment section as always. So that is that on the US oil. So we shall be moving on to the next pair. I want to see if there are any questions. Okay, all right. Mahan, good morning to you. How are you doing today? Trust you're doing well. All right, so let's move on to the next pair. The next pair we are going to be looking at this morning is the GBPUSD, and on the GBPUSD we have been quite profitable on this one too as well. I think as of this morning when I published this on my trading view platform, I think we were running with about 70 pips thereabout. Let's run through that quickly. I think we were running with about 70 pips thereabout on that one. Hold on a second, let's run through okay, so this is what we saw at the beginning of the week. We saw how price action was initially caught within that channel between the 1.22500 level and the 1.22300 level, and you know what we look out for whenever we have that kind of channel. It's very simple. We want to see a breakout or a breakdown of that channel for trading opportunity, and with the breakout of the 1.22500 level, I think after our live session yesterday we saw the breakout of that structure. It triggered our buy position, and we continued to monitor price action, and luckily enough for us, the position was giving us more opportunities to add more position to our existing trade. And I told you yesterday that we need to be very, very careful on this position, as it is more or less a counter trend opportunity where price action could retrace into the 1.22800 or the bullish trend line, which was broken on Friday to incite another wave of bearish momentum. And in that regard, I told us all that we want to be securing our position by moving our stop loss accordingly as long as price moves in our direction. And this is what we had here. I also told us yesterday that we should be using this bullish trend line as a yardstick for trading activity. As long as price remain above that bullish trend line, we shall feel comfortable in our buy position. And you can see what happened here. Price action continued to the upside, and then we anticipated another breakout of the 1.22800 level to add more position to our existing trade. We also saw the second position triggered here, and price action continued to the upside. And as of this morning, I shared this publication about an hour ago, where we saw our price action is back at the resistance line of that ascending channel that we identified earlier. And since price got into that level, we begin to see selling pressure resume around that area. And so what I told us all here this morning is this: we had two positions running with a total of 110 pips in profit. I told us all to secure all sell positions as selling pressure resumes along the resistance line of that ascending channel. And this is exactly what we saw here. So this morning we had the key structure had a 1.22100 level that I said if price action breaks down that structure, we want to be selling at that point. Because of the sell pressure we have noticed here, we have our sell stop order below the 1.2210 level, and at this point it appears that our position has been triggered at this particular point in time. So we saw the sell pressure here this morning, which was a beautiful sign that we might be seeing a situation here where price action will be respecting that ascending channel. Why do I keep saying descending? An ascending channel here. And you can see, if I zoom out a little bit into the past here, you can see how price action had consistently respected that ascending channel here. Look at it here. So we have the situation here. We have this, can see price action came into the resistance line. Price was unable to break out of that structure. As you can see, every attempt by the buyers to break out of that level has been met with strong resistance from the sellers. And if we look at the resistance line of that descending channel, you would remember that that level was initially our bullish trend line, which price action has been respecting for quite a while now. I think since the second week of this month, we saw how the bullish trend line has been supporting that bullish momentum since the beginning of this month. And with the breakdown of that structure here on Friday last week trading session, I told us all yesterday that we might likely be seeing a situation here where price will retrace back into structure. It could be retraced back into the 1.22800 level, or probably retrace back into the trend line that was broken to incite another wave of bearish momentum to the downside. And if we look at what has been happening here in the last 4 to 5 hours, you can see how selling pressure actually resumed just around the trend line that was broken here on Friday to give us a clue into the strength of the sellers here. And look at what we have here. We already have a sell position triggered at this particular point in time. And for those who are taking advantage of this opportunity here, well done to you for being on standby to have caught this move, as you will currently be running with about let's see, about 10 pips approximately in profit at this particular point in time. So our stop loss should be somewhere right above the previous structure here. So I will be suggesting somewhere around the 1.23400 level, which will be dovetailing to about 28 pips in profit on that one. So we shall continue to monitor the sell momentum to the downside here and hope that price action continue to move significantly well in our favor. So at this point, we should be having our TP targets at the maximum point at the 1.2200 level, a level which, remember, if you have watched my video on the GBPUSD during the course of the weekend, you will see how important that structure is. If you had not watched that video, I'll implore you to watch that video so that you can have a background knowledge of how we got to this current structure. Hence, you'll be able to make your own independent and individual decision when it comes to adding more position based on the knowledge you already have of the structure. So we should be having our maximum TP target around that area, which will be dovetailing to about 110 pips thereabout. And I'm of the opinion that we might be seeing the possibilities of multiple entries on the GBPUSD, as we do have a structure here at the 1.22800 level, which has a high chance of being broken to the downside. And in fact, that same level shares a beautiful confluence with that bullish trend line that has been guiding this bullish momentum since the beginning of the week. So whatever happens here, one thing I want us to know is that as we guide this bearish momentum to the downside, as soon as price gets into this level, we want to secure all sell positions at this point, as we need to see how price action will be reacting to this beautiful confluence here to decide if we are going to be adding more sell position to our existing trade, or we are going to be anticipating a bullish momentum. Obviously, that is a very huge confluence for buying pressure, as you can see what has been happening here since Friday last week. So it has been a strong buying niche in this market. So we need to be very, very careful, and let's see what happens here. So for buying opportunities here, we might likely see buying pressure, bullish buying pressure resumes, where price action transitions into probably a double bottom structure, head and shoulder pattern. Whichever reversal pattern comes in, breakout retest, then we might likely be seeing a situation where price is respecting that ascending channel. However, if we do have a situation here where price breaks down the structure to the downside, then at this point, the breakdown of this bullish trend line will be a beautiful sign that the trend line may no longer have the capacity to continue to hold that bullish momentum. And if this happens, remember, we are not getting too excited at this point, as we need some confirmation to come in to give us that confidence to be able to sell the GBPUSD. And what we want to be seeing here is price action coming back to do a retest of that structure, probably selling pressure on our lower time frame. Then we could actually join that decline to the downside. Be rest assured that I will be jumping in the comment section as usual to give you an update on what my expectations are. But obviously, when price action breaks down the 1.22800 level, we shall be adding more position to my existing trade. So that is that on the GBPUSD. And if you do have questions, feel free to drop your inquiries in the comment section. So that is my sell expectation, and I also shared the option of buying possibilities coming in around this area. But if it so happens that we were taken out of our current sell position at any point in time, that is, price action climbs to the upside, finding higher highs, for me personally, I would want to see a breakout of this 1.23500 level for me to be buying the GBPUSD at all. And the reason why this is simple, look at the structure here. Since last week's trading session, you can see that price has found it very difficult to break out of the 1.23500 level. As you can see, every attempt by the buyers to break out of the structure at every point in time has been met with strong resistance from the sellers. And as a result of this, I need some confirmation that buyers are actually strong here. And the only way I will be buying at this particular point in time is to see a breakout of that 1.23500 level, which also shares a confluence with that trend line here. So what this simply means is that if a breakout of that level happens, then price action would have climbed back above that bullish trend line. And if this happens, and to buttress this, we start seeing buy pressure resume above the structure, we'll feel comfortable buying the GBPUSD at this point. So these are the things I'm looking forward to. At this point, I'll hold on to my bearish buyers, and if price action breaks out of the resistance line of that ascending channel, breaking out of the 1.2350 level, then I could be considering buying the GBPUSD at this point. So that is that on the GBPUSD. I see a comment from Kwaku and Nim. You want me to treat AUDUSD? Unfortunately, it's not part of our our instrument for this week, but I will try to look at it if time permits me. All right. Okay, so let's move on to the next pair. The next pair we shall be looking at this morning is the XAUUSD. And in fact, on the XAUUSD, we had a quite profitable situation going on here in the last 24 hours. And remember, like yesterday, we initially identified a channel here which was situated just right within the 1980 level, which happened to be the resistance point for this week, and that was the highest point price action has ever been for this week. Then we had the support line of the channel here had the 1970, and luckily enough for us, we had our sell stop order at both ends. And what we had here yesterday was the breakdown of that $1,970 level to trigger our sell position in this market. And look at what we have here. Price action had moved significantly well as we had this move all the way to the downside. So if you are a long-term trader and you still have your positions running, your price moved about 260 pips in our direction. And if you still have your position running, you will still have something about 180 pips in that direction. And to further buttress this analysis here, I would like to share with you how the trade went by so far in the last 24 hours on my public platform. So this is where we had the sell position triggered here below the 1970 yesterday, and we continue to rather move all the way to the downside. I told us all to secure all sell positions at this particular point in time. I think price was running with about 100 pips thereabout at this point. Then we also added more positions at the structure as price action continued to find lower lows. Now, when it got into the 1949 level, something interesting happened around this area, which gave me a clue that there is a potential of buy pressure coming in at this point. And if we look at the sell pressure since the beginning of the week, you will realize that at that particular point in time, a retracement is long overdue, as those who took advantage of that sell momentum buying the USD against the gold commodity yesterday would probably have been thinking of taking some profit quickly, as they never can tell, anything could happen. Remember, we have macroeconomic event affecting the dollar this week, and that is GDP. So everyone is still very doubtful of the dollar. The dollar is not popular right now, as the fear of recession is still very, very high, and including that, we have the banking crisis, though the Fed chairman gave some level of comfort that this will be resolved, but people are still very doubtful of the dollar. And because of the situation, we begin to see some buy pressure resume at around the 1,949 level, and at this point I shared here that we might likely see a retracement happen at this particular point in time. And to further buttress this, what I did next was to identify a simple setup here on the 30 minutes time frame, where I saw price action trading between the 1,958 and the 1,946. Though price action has been bearish, we have a bearish trend line which emphasizes the bearish momentum here. But one thing I was looking at after citing that bullish momentum around the 1,946, 1,949 area, I was thinking probably profit taking activities will be happening, where price will break out of that trend line to the upside to incite a move, a counter trend opportunity. So with this buy stop order above the 1,958, we had the buy position triggered here, and price action moved about I think 60 to 70 pips this morning before price action dropped back into the entry zone. And I'm sure you must have moved your stop loss accordingly to secure your position, and in worst case scenario there, you must have closed at break even. Now with the situation of things right now, price action trading below the 1,958, we might likely be seeing the beginning of another wave of bearish momentum to the downside, as this profit taking activities here appear to be a very short one. Now if we go back into the live chart here, this is what we can see on the live chart on the 1 hour time frame. And remember, we still have a key structure which we said we shall be using to guide our trading activity for this week, and that is this bearish trend line we identified here after connecting the series of lower highs. And with the situation of things right now, price is still trading below the bearish trend line, hence we can still feel comfortable in our sell position. And if you remember yesterday, I shared this the setup here, the 1,960, where I said price action coming to retest that structure could trigger a sell position. Personally, I missed this one, as I was fast asleep when this whole situation was happening around this area, so I actually missed this. So I'm hoping that I will be part of this one. And for those who are taking advantage of that sell position below the 1,960, well done to you for being on standby to have caught that move, as we talked about this structure here during the live session yesterday. And currently, if you are taking that move, you will currently be running with about 70 pips in profit right now. So it's most appropriate that you move your stop loss to secure this current position. So right now we want to remain patient here to continue to wait out and see how price action will be reacting to this current level to decide what our next line of action will be. So if we look at the current structure here from a technical standpoint, all we have for this week is an impulsive move to the downside. Price action rejected the 1,944 level, and we saw a retracement back into the upside here. So as this retracement phase ended, well, we don't know yet, but one thing for sure is that price is still trading above the support line here. So I would like to adjust this one to fit in the lowest point price action has ever been for this week, which is exactly at the 1,944 level. So for the sake of clarity, I would like to label this. So we have the 1,944 level here. So that is the lowest point price action has ever been for this week. Is it 1,944? Okay, 1,944. So if you are not yet in this trade here, I will be suggesting that we hold on and see price action take out the buy positions here at the 1944 in anticipation of another wave of bearish momentum. And if a further breakdown of the 1935 level happens, we want to be thinking of adding more position to our existing trade. So at this point in time, if you are not yet in this trade, well, I will be advising you to hold on. Personally, I'm not also in this trade. I missed this one. Like I said earlier, I was asleep when this whole situation here happened. So now with the situation we have here, we hold on to a bearish bias in this market. But one thing we should all so do here, like I always say here, we want to be as fluid as possible. So if the market change stance, we also want to change along with the market. And now if we consider the buy pressure that resume around the 1944 level here during the New York session yesterday, it could be a platform for bullish potential here, where price action could evolve into a reversal pattern in the form of a double bottom structure. Hold on a second, I want to draw this out a little bit. I'm not sure why my chart is not okay. Hold on. Okay, so we have this impulsive move to the downside. Price retested the 1944, comes back into the structure at around the 1964 level. We can see this move to the downside. So what happens here is this: if price finds it difficult to break down the 1944, as in we cannot find a lower low at this particular point in time, and instead price action finds a higher low, then we might be seeing this as a reversal pattern. And for this reversal pattern to be valid, we need a neckline area that we shall be using as a yardstick for trading activity. And the neckline here, I will assume, will fall at around the 1964 level, which I will be punching in right now so that we can have a visual understanding of what is going on here. And if you look at the 1964 here, it shares a beautiful confluence with that bearish trend line that has been supporting this bearish momentum since the beginning of the week. And if it so happens that the neckline is broken to the upside, it will have breached the bearish trend line as well, where buying pressure above the structure will welcome a buy position in this market. So this is the only thing we are going to be looking out for if we are going to be buying the XAUUSD today. We want to see price action break out of the bearish trend line, break out of the neckline. If price was unable to find a lower low, that is, price was unable to break down the 1944 level, then we could be thinking of buying the XAUUSD. So you can see how the trend line here will continue to serve as a yardstick for trading activity for today, for this week rather. So the bearish trend line is still serving as a very strong yardstick. Price action trading below that structure still remains, we remain in our bearish momentum, and if a breakout of that structure happens, we want to be looking out for buying opportunity. So that is that on the XAUUSD for today. So I'll be seeing you in the comment section on my TradingView platform to give you an update on what my expectations are. So at this point, we have a sell stop order below the 1944 to welcome additional positions here, and let's see what happens afterwards. I will be giving you an update in that regard. If you have questions, feel free to drop your inquiries in the comment section while I move on to the next pair. And the next pair, and this is the last pair on our watch list for this week, and that is the USDJPY. And on the USDJPY here, we were actually enjoying a bullish momentum at the beginning of this week after sighting this channel between the 131.00 level, which happened to be the resistance point at during the first 8 hours for this week. And then we had a support line at the 130.500. And what we saw here during the live session yesterday was a breakout retest of the 131.00 level. And if you had watched my USDJPY publication during the course of the weekend, you would acknowledge the importance of the 131.00 level, which has been a strong demand zone for participants in this market in the last 10 to 11 months. And with the situation of things here, I told us all yesterday that if price action breaks out of the 131.00 level, we want to be buying at that point. And that was exactly what happened here. We saw buy position triggered at this point, and in fact price action moved about 70 pips, 75 pips in our favor before the sell pressure resumed around this area. And in fact, it took us out of all our buy positions here. And definitely you must have moved your stop loss to secure positions. Like I said, when price action move in our favor, we want to be moving our stop loss accordingly to secure the position just in case any sudden pullback happen. And I think I shared this on my public platform yesterday while price moved. I told us all to secure our buy position, that is, you move your stop loss, secure the current position, and let's see, then we had a second position triggered here, but the resumption of selling pressure here negated all that bullish momentum, and we saw how price action took us out of all the position. So this is what I shared here during the early hours of today. I said after being taken out with a small profit, price action drops and breaks down the key level at the 131.00 level. So it's important that we remain patient here to see how the price will react to the 131.00 level for our next line of action. And if you look at the live chart here, you can see how price action has been around the 131 level in the last 3 hours. Though we have a breakout of that structure already, I'm of the opinion that as long as price remain above the 131.00 level, we shall remain bullish in this particular market. And unless a breakdown of the 130 happen, we are not going to be selling the USDJPY for today. And I think I shared immediately after that, I shared a simple setup I was able to identify on the 30 minutes on this chart, which I laid emphasis on after the publication this morning. I shared the setup on the 30 minutes time frame, which is looking more bullish to me, is looking more like a reversal pattern to me at this particular point in time. As you can see the situation here, following this impulsive move to the downside, we have something like the left shoulder, we have the head, price comes back into the structure, and it appears we are having the right shoulder gradually unfolding before our highs, but it needs some time for this to happen. Probably it could take about 6 hours before it happens, but our patience is at this point required. So we have the neckline of that head and shoulder pattern somewhere around here. So let's figure out, okay, 131.700 seems most appropriate to put the neckline of that potential reversal pattern, which is gradually unfolding. So I want to extend this out a little bit so that it can cover the length of this price action movement at this point in time. So I shared this morning here where I said, okay, this is a 30 minutes time frame. I said buying above the 131.00 levels still seems most appropriate. And remember, if you had watched my video on the USDJPY, the link is in the description box below of this live video you're watching right now. You need to watch it to understand the importance of the 131.00 level. So I said above the 131.00 level, since it's a strong demand zone, it has a strong memory for buying power, which has lasted for quite a long time. I'm of the opinion that price action remaining above that level will be a very good platform for buying opportunities. So with the situation we have here, we have a buy position triggered already. Price action is still trading above the 131.00 level, and let's look forward to more opportunities on this one. So stop loss should be somewhere right around the 130.630 area, which is about 33 pips, and then we look out for more opportunities. And if price action goes on to break out of the neckline of that potential head and shoulder pattern we just identified here, then we shall be welcoming more buying opportunity in this market. So let's see how price action plays out in the next couple of hours. So we have a bullish trend line here. We shall be guiding our trading activity for today. As you can see, after connecting the series of higher lows, I have this trend line mapped out in this market. So we continue to look forward to buying opportunity as long as price remain above that bullish trend line. But if a breakdown of the trend line happens at any point in time, then we might likely be getting ready to sell the USDJPY. So this is what we shall be looking forward to on the USDJPY for today. And on this note, I want to be calling it a day on the pairs that we have been monitoring for this week. So for the sake of Kwaku and name, let me just run through the AUDUSD to see what is going on there. I will not be able to go into the details on the higher time frame because of my my time here. I only have like 30-45 minutes before my next live session on the X-Trend Speed. So let me run through the AUDUSD before we call it a day here. Let's see what is happening. If we have something simple to look at on the lower time frame, let's see what happens here. Well, this is the 1 hour time frame here. Let's scale up a little bit into the 4 hours time frame. What can we see here? Okay, so since the beginning of this month, it has been bearish on this chart, as you can see here. And if we bring out our line chart and we connect the series of lower highs, we have something like this for us to fall. And okay, then we have a key level somewhere around here, which falls around the 0.6700 level, I guess. We have a key level there, and I always like my key level to be golden on the higher time frame. So first of all, let me label this one 0.6700 level, give it a gold color, and then give the line a gold color too as well. All right, so we have something like this, and if we look into the past here, you can see how this area has been a strong demand zone. So let's label that area too. So we have a demand zone figured out here, and my demand zones are always dark, and then I have demand zone figured out here. Give it a white color, place it right inside and within the center of this. So we have a demand zone here, price. So this structure here is looking more like a reversal pattern to me, and we already have a breakout of that bearish trend line. We have a bearish trend line since the beginning of this year, and we have a reversal pattern. Price action appear to be finding higher lows in this particular market, and if we connect the series of higher lows here, we have a bullish trend line which we can use to guide our trading activity for this week. And let's see. Okay, so we have the 0.670 level. So for this reversal pattern to be mature here, we want to be seeing price action break out of that level to the upside here. So you could have a buy stop order above the 0.6700 level. This is from the 4 hours time frame here. And if price action breaks down that bullish trend line, then we might likely be seeing an opportunity to sell, but we need to be very, very mindful of selling below the structure. And the reason why I've said that is simply because of this demand zone here. So we need to be very mindful. So if a sell breakdown rate of that structure happens, you want to be moving your stop loss accordingly to secure your position as price action moves in your favor. However, if price action continues significantly breaking down that demand zone, then at that point price action has taken out all the buy positions here, then more liquidity in the market will be reflected as a retracement, retest of structure, selling pressure below the structure. Then you could have more selling opportunity, sell positions in this market. So that is what we shall be looking at here. Sell below the bullish trend line here, and look out for buying opportunity above the 0.6700 level. Now if you scale up a little bit into the 1 hour time frame to see what is really going on here, well, you will see that we have a reversal pattern gradually unfolding right on the 1 hour time frame. After the impulsive move to the downside here, we saw this move to up here. Price breaks out of the neckline, so we have a simple neckline here on the 1 hour time frame, which we want to be using to guide a potential trading opportunity to the upside. So we have this area at the 0.6650 level. So I will label that and place it at the top right hand side of my screen, give it a black color, and this is where we are. So we have the neckline area for that reversal pattern, which actually has been broken. So we look out for buying pressure above this level. Then we could join the trend continuation to the upside. And remember, that is the key level here at the 0.6700 level, where another breakout of that area will be welcoming additional buy position in this market. So that is how we want to be buying the AUDUSD for today. But if price action breaks down the bullish trend line we identified on the daily time, on the 4 hours time frame, then we look out for selling opportunities below that structure. Kwakuk, a name I just explained that. I hope I was able to make much sense with the structure here. If you don't mind, screenshot my screen so that you can use it as a reference point when you're about to make your individual decision on the AUDUSD. So it's on this note, I want to wish you the best of luck during the New York and the UK session today. I'm very sure you are all well equipped to be able to identify any trading opportunities that might come up during the trading session going forward. So thank you very much for being around. I really appreciate it. I'll see you in the comment section on my TradingView platform as we get prepared and continue to monitor price action. Do have a wonderful evening, everyone. Bye bye. And please don't forget to like, subscribe, and share this video as well. Please support the project. Thank you. Bye bye.